Former Barclays CEO. Bob, good to see you. Thanks so much for joining us.
Nice to be here.
So whether it's because of this latest extra wave of stimulus or other factors, do you think that global GDP will surprise to the upside in the second half of this year?
Yeah, we're pretty positive. I think, assuming that the smooth transition that's happening in the White House continues, which we would expect, and assuming that we get a continued positive rollout of vaccines, as we would expect, then, this stimulus is going to have a pretty positive impact. And the reopening of the economy, it looks like a strong growth in the second and third quarter. No question about it.
And so what about inflation? I mean, particularly as we think about the yield curve and banks, you've got the European Central Bank saying they're going to step in to try and stop yields rising. Do you think the same would happen here, or will the rising yield curve continue here?
I think the rising yield curve is actually quite constructive, Wilfred. Let's put it in context. Over the last 10 years, the U.S. 10-year Treasury has been kind of between 1.5% and 3%. It's been in that range. It dipped to 50 basis points during the pandemic for reasons that were about the economy slowing down and all the things that we know and the monetary policy, et cetera. It began rising in August when Chairman Powell at Jackson Hole talked about changing the inflation target from a 2% to an average. And we recall that, and that 50 basis point 10-year Treasury over the course of a number of months into February this year became, I think, 1 or 1.10, something in that area. But the jump from 1.1 to 1.5 more recently, I don't think that's about inflation. I think that's about growth. I think that's about understanding the impact of the stimulus and getting people back to work. The combination of the vaccine, $5 trillion in fiscal stimulus since the pandemic, $4 trillion increase in the Fed balance sheet, the vaccines beginning to roll out. And I guess I'd ask the question, would you rather have 1.5% Treasury rates here in the U.S. or like Germany, where it's negative 0.35% Treasury rates, which is a statement about their view of growth versus our view of growth here in the States. I think it's very, very positive. And I'm pretty relaxed, pretty sanguine about that 1.5% Treasury. Wilfred, I would say that's the low end of the range we're going to see going forward of 1.5% to 3%.
What's going to happen when the stimulus fades? Everybody's positive in the near term, but you just laid out the trillions of dollars in fiscal and monetary stimulus. They can't last forever. So if the Federal Reserve starts to pull the punch bowl, starts to raise interest rates, if the fiscal stimulus starts to fade away, then what? What are we in for?
Sarah, you're such a killjoy. We're just talking about the stimulus. It was just signed today. No, you raise a very good question. If you go out, if we stop putting stimulus into the economy, that is in essence a tightening. So you're absolutely correct is what happens down the road. I think as we look out at the second and third quarter, it looks extremely good. And again, as we said, the rollout of the vaccine, people wanting to get back out. I'm going to the Celtics game at Barclays Center tonight. I haven't been in a sports event since last February. So there is a pent-up demand, and I think it's pretty positive. I think over time, we're going to have to answer just the question that you asked.
Shepard Smith here. Thanks for watching CNBC on YouTube.